Hi, everyone. Get ready for the How I Raised It podcast, the show where you get an inside, unfiltered look at how real entrepreneurs raise capital for their businesses. I'm your host, Nathan Beckard, and today's episode is with Slava Rubin. Slava is a founder of Vincent, an alt investing platform. He's also an angel investor and a VC, and he founded Indiegogo and grew Indiegogo from an idea to over 500,000 campaigns, one of the pioneers of crowdfunding. If you're tuning into this podcast to learn how to raise capital for your business, I've created a super valuable free welcome package for you. It includes a list of 2,500 investors who don't require a warm intro, plus a list of 200 of the most important questions investors are going to ask you. So this package will really help you get prepared and rock your fundraise. To get instant access to this, please click the link in the first comment. While you're there, please leave us a nice comment what you liked about this show or this episode. Last but not least, if you enjoy this conversation and think someone else would too, please share it with them and hit that subscribe button to get all our latest episodes. Thank you. Sit back and enjoy the chat with Slava.
Welcome to How I Raised It, the podcast that goes behind the scenes with entrepreneurs who've raised capital. We uncover the tips, tricks, and techniques they use to get investors to write a check. Strap in and turn it up.
Hi, welcome to another episode of How I Raised It, produced by Foundersuite.com. Today I have Slava Rubin of Vincent and Ambition coming to us from just outside New York. How's your day going?
Going great. Thanks for having me.
I don't know if you remember, we met many years ago when you were just raising capital for Indiegogo, and I think Louis Gersh of Metamorphic Ventures at the time put us together just to chat about Indiegogo, which was your original startup, correct?
Yeah, that was the first baby. That's so long ago. Louis is awesome. Louis was willing to follow after 93 rejections, the first VC that was willing to put in some real money into Indiegogo. He was ahead of his time. We went on to raise a bunch more after that. But yeah, it's probably been a decade, I think, since we originally met.
Crazy.
So time flies.
You still have all your hair and it's still dark. I, on the other hand, different story altogether. So whatever you've been doing, good for you. Keep doing that. Yeah. And now Louis is out doing his own startup, Pebble Post. He left the venture world and he's raised a ton of money for that. So it's kind of cool to see how these cycles of renewal and regeneration happen, right? So
yeah, as a matter of fact, Louis was one of those VCs that I really got along with. I mean, it's really important to try to find great relationships as an entrepreneur with your investors, which is not always easy. I mean, it's like marriages. A lot of them end in divorce or worse. And Louis and I just had a great relationship. So when he actually had this idea for Pebble Post, he was looking for somewhere to work just to get out of the house and figure out how to kind of incubate the idea. So he actually did all of it out of the Indiegogo office.
Oh, cool.
So he came to our office and would just take a desk and we would hang out, have lunch sometimes. He would, hang out with some of my coworkers who we knew well. And it was just amazing to see it grow. So, if he was going to be sitting at our desk, I had to put in some money right in the beginning. So it was one of my early angel checks, was first money into Pebble Post. That's
awesome. That's a great story right there. Cool. Well, let's talk about what you're up to now. I guess, what do you want to start with? Let's start with Vincent. What is Vincent?
Yeah, Vincent is a platform where we're aggregating alternative investments. So anybody can look at it as like a search engine across all of alts. So alts are like crypto or art or debt or real estate or venture or collectibles like trading cards. And it's a massive market, and it's been online now for about a dozen years when Lending Club started, but it's so fragmented and people are just struggling to figure out how they want to navigate it. And we just created the first of its kind, which is a platform that aggregates all the platforms in one place and aggregates the deals. So you can kind of think about it like Zillow, what they did for real estate, or Kayak, what they did for flights. So very similar. That's what now we're doing for the alt space, which is growing very rapidly.
You call it a platform, but is it a search engine? Is it a sort of data layer on top? Are you taking a piece of the underlying transaction that happens, or is it more just a pass through? Hey, let me find good art investments or crypto deals, or what?
Great question. So the first step is definitely a search engine. We're aggregating all of it. You put in your filters. You tell us what kind of verticals you're looking at, what kind of investments you want to make in terms of amount, how long you're willing to lock up your money. And then instead of looking across, 12 different browsers to 12 different sites, we aggregate all of that within seconds into one search result. So the average user will look at 25 deals in one session across 7 different platforms, across 3 different verticals, all within our site without having to go anywhere. And then if you do want to transact, we hand you off to that platform and you transact on that other site. But then we also have a bunch of content where we're educating you about alternatives. We're pulling together a newsletter. Some people are calling it like the morning brew for alts, where we aggregate the best 15 articles of the week all in one place. So that's why we call it a platform, because we're going to continue to build out more information. We actually have proprietary data, which we're putting out once a month that the New York Times just wrote about, which is how is the demand shifting across the verticals? Is month by month, are people more into cards or are they more into crypto? Are they more into art or are they more into real estate? So you can't really find that data anywhere, how that shift is happening. But we actually have exactly that data on our site, and we put out that report once a month.
Interesting. Cool. What's the ultimate end game in terms of business model? Is it taking a piece of the deals, or is it more data and maybe selling that data to, I can think of a lot of people who might want to buy that data, but what do you think is the ultimate business model?
All of the above is possible. Right now, we're not focused on monetization. We just launched in November, so under a year now that we've been around. We already have over 100,000 investors that have used the platform, about 80 platforms that are using our site as a partner. If you whipped out your checkbook and you wanted to buy every single deal on our site right now, you'd have to spend around $4 billion. So we have a good amount of deal volume, and we've already had people conduct over 1 million searches. So really the goal is to become the on-ramp when people think about alts. So often people get stuck about how to get some alt allocation into their portfolio because they're intimidated. They don't know enough about crypto. They don't know enough about art. They don't know enough about ventures. So we really want to be that on-ramp. So if somebody says, you know what, I have an extra $1,000 that I kind of want a little bit higher alpha, or I just got my bonus and now I have 20 grand that I just rather not have it sit in money market or put it in Robinhood. We want those people to start with us and figure out their answers with us. So yeah, there's tons of monetization opportunities, but at the highest level, right now, too many people just have their 60-40 mix of equities to bonds, and they just don't have any alt allocation. And the institutions know that if you want to make real money and real returns, you need to have a portion on that higher risk, higher return alts. And we want everybody to get after within the next decade.
What is the percentage of allocation? It probably depends on your age and income and some other stuff. But in general, do you recommend a certain percent of your portfolio should be in alts? Is there sort of a rule of thumb around that, or what?
You said it exactly right. It depends on age, your income, your risk tolerance, how much liquidity you need. But said very, very, very simply, 3 to 7% for sure. So, if you want to kind of think about like an apple a day, sort of concept, 5% is totally good if you want to stay healthy with your portfolio.
And again, this is probably a multi-layered answer, but do you have to be an accredited investor, or is this open to the grandmas and college students with the extra $1,000 stimulus check, or what?
Absolutely, both. Yeah, so it's about 50-50 right now. You self-qualify yourself as being accredited, and we'll show you the right deals based on your accreditation. But absolutely, that sort of filter can be annoying if you don't know what that is based on various platforms, and you show up on the site and you're like, you just filled out all this, accreditation, you just filled out these registration forms. And they're like, you know what? We can't show you any deals. I mean, that's frustrating. So we're doing exactly all of that for you. So you just have to answer a few questions and we show you the right deals. So yeah, there's some sites you could throw in $100 or maybe even 10. And there's other deals that the minimum is like 50,000 or $250,000.
Is anyone, and maybe this is in your future, you don't have to give away your or show your cards, but does anyone put together just sort of a mutual fund, an alt mutual fund? Like, I don't want to pick the right NFTs or cryptocurrencies or crowdfunding because I have no idea, but maybe I want to invest a portion into a fund that spreads across that. Is that in the works at your place or else?
I think that'd be really smart for somebody to do that.
Okay.
Maybe we should do that.
Interesting. Very cool. Well, great. And then I guess let's talk about raising money for this, because
just building on that, if you become the on-ramp for people to want to do quote unquote stock picking, obviously not everybody wants to do stock picking as a metaphor. If you look at day trading, 20 years ago, obviously Robinhood is hot now, but day trading isn't new. Once people felt that they had the opportunity to do it, people got excited about that. But still, most of the money still goes into these much larger passive instruments, set it and forget it funds. So we'll start early in alts, but I do believe similar things will evolve with alts.
Yeah, interesting. Cool. Let's talk about raising money for this, because you guys just announced a seed round. Was it a seed round?
Yeah, officially it's a seed. Some people were calling it an A. It's hard to know what you want to call these things these days, just because of inflation and bigger numbers. But officially, it was a seed round. Yep.
And talk about
we raised $6 million.
Yep. I saw it looked like mostly angels, Jason Calacanis and Joe Lonsdale and a few others, or was it VCs?
That's exactly right. I mean, they do have funds, but it was very strategic as to how we, raised the money. We were thinking about going straight to a classic VC, and raising a $6 million round where somebody put in 4 or 5 and took kind of the whole thing. And one of those typical names that many people listening here are familiar with. The founding team has a lot of experience, and we weren't really looking for per se the brand name to have the brand name. What we wanted was more of the influencer value and more of the operational knowledge related to fintech, specifically related to alts, specifically related to distribution. So yeah, we pulled together a killer group of investors, very specific for us. Some other deal, they might not want these investors, but for us, we thought perfect. So Jason Calacanis with Launch Fund, and he has a great angel network and has a big syndicate, has a good bullhorn on Twitter and other media channels. Mm-hmm. And then Joe Lonsdale from PayPal, Adapar, which is straight up our alley with fintech, and then accredited and alternative investments. Then we got Barry Silbert, who built Second Market before and now is obviously famous from Grayscale, having built a massive set it and forget it fund machine. And then we also have some other great investors, including several of the CEOs on our platforms who actually work with us. And then Sahil and Meltem, both great influencers and super knowledgeable about fintech. And you got to love anybody who goes by their first name only. So they were great for distribution and experience as well. So those are just some of the examples of the folks. And it was not by accident that we packaged together that sort of deal. We did have the classic, lead investor deals, and we wanted to go more towards the operator and influencer and distribution route.
So let's dig into that a little bit deeper. How did you do it? How did you actually put this round together? In this show, we really get into the weeds of this. Did you whiteboard a list of 50 people you'd want to potentially, and then just kind of reach out and, what was the actual nitty gritty of in the weeds putting that together?
Yeah, I mean, so I'm actually an investor as well. I have a fund. So I regularly coach entrepreneurs as to how to navigate the raise. So, I just dog fooded what I tell others, which is you typically want to raise when you're about 6 to 9 months out of when you think you might need the money. And I like to think of the raise process as like a 2-month experience if you're doing it well. You obviously need to pull together the story, and that then consolidates often into some sort of document, either a deck that you put into DocSend or some sort of a Word document. And for us, that was about understanding how much are we trying to raise? What are we going to accomplish with that? What are the milestones we were going to hit? What are the resources we need to accomplish those results? Often that then bakes into a financial model to support kind of your assumptions and what assumptions need to happen to have this all happen. So that was some of the homework in advance. In parallel, we also pulled together kind of our set of, said simply, 30 investors that we would want to potentially go after. And when I say investor, I mean actual name of the person at the fund. I think too often people think about funds and don't think about the person. But I think, really you're getting married to a partner, not a fund. So you want to know why you're going after that partner. And we started going down the path of speaking to some of those funds, but I also had some strategic folks that we always knew that we wanted to kind of pull in. So some of those conversations we knew we were going to want to get early on their calendars and to see if they're interested, so that when we do have to negotiate with the leads, what kind of capacity we need to have to keep open. So I wanted to get a sense from somebody like Jason or somebody like Barry, hey, this is going to be something that's going to be happening. I'm not coming to you to lead this, even though you potentially could. I'm coming to you to see if you'd want to be an influencer to come in with a small check. And while things were going really well with these other funds, Jason expressed his interest. He very quickly had significant conviction saying, you know what, I don't want to just be an influencer. I think I want to lead this with you. I said, well, my approach to a lead would be getting a whole lot of other influencer checks together. Are you down for that? He said, yes. And that was the short version. I'm happy to go into more details, but that's kind of how it came together.
Yeah, I do want to get into a little bit, because that's an interesting approach. Like if you have these big name brands, Jason Calacanis and Joe Lonsdale, do you talk to them early on, or do you wait until you have kind of a lot of momentum going? It sounds like you kind of talked to them early, and that created momentum, right? I mean, maybe
it did. To be fair, I did know some of these people personally, so I didn't need the term sheet to figure out how to get introduced, if that makes sense.
Yep.
So I don't want that to be missed on anybody or myself, because, in my early days of building Indiegogo, there was no way I was going to be able to just out of nowhere reach out to Joe Lonsdale. Like, that wasn't happening. I definitely would need that term sheet to get connected somehow. But in this situation, because of my background, having been around for a while, already knew so many people and was very targeted about exactly who we wanted. So we weren't just casting wide nets saying, hey, would you want to throw a check in? We were pretty targeted, we want you in. Are you interested? And yeah, so I think it depends on your situation. But for our situation, what I didn't want to have happen is I get somebody of that caliber excited, and then we're not able to have enough capacity for them as part of the negotiations with the lead. So I wanted to have that kind of in my back pocket when and if there was negotiation with the lead, because as there's the negotiation as to what the lead will do or not do. And once you negotiate it, you kind of want to stick to your word. Having to renegotiate that stuff is challenging, which is why I wanted to have that information in my back pocket up front.
Sorry, you may have said this right, but did someone lead the round, or was this a party round, or was
officially in the docs, Launch Fund led it. So Jason led it. And then as part of that, it was partially through the Launch Fund and partially through his syndicate. And we were really excited about that because he actually has a syndicate vehicle that he has thousands of accredited investors and QPs that are interested in his deals. And for us, we're looking to try to, as Vincent, democratize access to alts. So we felt like it was dog fooding to be able to expose our offering to more one-off investors. So we thought that was cool. We also used AngelList for a small distribution, for a small syndication as well.
Got it. Interesting. So, wow.
Because we were trying to get, we didn't need it. We were well oversubscribed. As a matter of fact, on Jason's deal, we were the most funded or most demanded deal he's ever had in his syndicate. So we were 3x oversubscribed on the capacity and had a lot of money that was on the table. So the idea of going to AngelList, in addition, for example, there was no function of needing money. It was rather wanting to have more distribution of investors being associated with our platform.
Mm-hmm. And those, how many folks are in the syndicate? I'm assuming they're all in one line item on the cap table, one entity.
On the AngelList one, or on the syndicate one, where
Jason's syndicate? Yeah, I
think Jason's is I don't know exactly, but it's a couple hundred. I think it's two line items. I think it's one is QPs and one is accredited investors.
Interesting. Cool. Very cool. What do you think?
And then AngelList is one line item as well.
So, taking a step away from your own baby and being dispassionate, what was it that led this thing to be so hot and 3x oversubscribed? Is it your background? Is it just a really good idea? Is it some combination? I'm assuming there's not a ton of traffic or traction. I mean, you had some searches and stuff, right? Or, what was the sort of secret to this success, if you can unpack it?
I would say all of the above.
Mm-hmm.
So I think you nailed it. So yes, I'm biased, very biased. I think we have an incredible founding team. Our CTO was the guy who built Mirror and sold it to Lululemon for $500 million. So he was the first engineer there on the hardware and software side.
Oh,
My
wow.
COO is, sorry.
Wow. I just said wow.
Yeah. So my COO is the guy who built my investing business at Indiegogo when we went into equity crowdfunding. So we really had a lot of knowledge as to what it was like to be one of these origination platforms. And then my CEO is a serial entrepreneur multiple times in the fintech space, and I'm exec chairman. So yes, we have a very strong founding team. Already had a couple more engineers, designer, etc. The product, again, I'm very biased. I think is quite beautiful in terms of an experience and very simple. Usually that's the feedback the investors would have or anybody who uses it has. And really that usage in itself shows that people jump across 7 platforms, kind of shows the simplicity of going across various deals, which is exactly what our search engine was meant to do. And since we launched, again, not by accident, we came out of the gate pretty hot. As of November 1st, right away getting a bunch of growth on search volume and investor volume. So we were able to show some of that up and to the right. I don't know if I would use the term hockey stick, but definitely up and to the right growth, which tends to excite investors. And, I do have experience and we're all pretty mature people. We ran a pretty tight process, that created momentum, and it wasn't kind of just sitting on our hands hoping somebody would call us.
Yeah. Rewinding just a minute, talking about the process, you, I think earlier said you start 6 to 9 months before fundraising to kind of get everything in order. Was that, what was the 6 to 9
No,
months?
I said that incorrectly. So when you're going to run out of money, I think you should be raising around 6 to 9 months before you're going to run out of money.
Got it. Yeah, got it. Got it. Yep. Cool. And did it go in the 2-month window that you sort of target there? How long did it actually take if you're running this process?
From the point of officially starting to getting the term sheet, it was actually a matter of weeks.
Oh, wow. Yeah. Cool. Everyone's dream.
Well, because like I told you, it was kind of shortcutted through Jason, because we were talking to some other institutions, which, you always have to expect will be longer diligence, if that makes sense. They kind of drag it out because I, as a fund too, know this, but I try to be as nice as possible as a VC. But, a lot of VCs use time as one of their elements, to keep on seeing what's happening.
Mm-hmm.
But Jason moved very fast with conviction, which was awesome.
And I'm hearing stories about this all the time, about the time as a competitive weapon for investors, right? It's so competitive now to be an investor, and you have all this even later stage money coming into the venture market, which is making the VCs move a little faster in many cases, or at least for the hottest deals. I don't know, is there any takeaway for founders? Like, that's a net positive for founders, probably, that investors have to move a little faster. Is there any takeaway or action item that founders can use to use that to their advantage? I don't know.
I mean, the market today, on August 2021, it is as hot towards founder as I think it ever has been.
Yeah.
And this is a bold statement because obviously things could evolve even more, but I don't know if it'll ever be so pro founder. So if I'm a founder, yes, I'm trying to raise money, as much money as possible. Yes, you want higher valuations, but I don't know, I have to be as greedy on the valuation as I am as greedy as getting as much money as possible. And sometimes getting more money automatically means it's a higher valuation. Sometimes it means you're just eating a little bit more dilution, but getting more cash. I'd rather get as much of that cash today as possible. And I also think that too often entrepreneurs feel like they're playing a part in the VC's process. I think it's really critical to try to own your process and say, this is how this is going, and this is what I'm sharing. Then I already have this already. This is the timelines. Oh, I've already picked my 10 or 20 or 30 investors that I want to talk to. You're one of them that made it through. So it's like they're on your process. So the more it could be that the VCs or the investors understand that they're on the entrepreneur's process, the more likely that there's going to be FOMO, the more likely there's going to be fear of that, greed, saying, oh man, I don't want to miss out here. And I just think that's really critical. Now, if the markets completely shift to be investor friendly, it's going to be that much harder to play that game. But if you have the data and the growth and the revenue and the traction to support that, then it's just a matter of having good storytelling and selling.
Yeah. I think that's so critical, and it's one of these hard things. It's hard for maybe first-time founders to understand of how much that is. Can you do that if, it's great that the market's hot, that helps. If you haven't been a successful founder like you before, maybe you're the first-time founder, maybe you don't have the hockey stick or runaway traction, can you still sort of own your process with investors? Or should you just kind of, you have the confidence to do it and hopefully
it depends on the stage. So if all you are is an idea and it's like a twinkle in your eye, it's very hard to own the process. If you have no background or no secret sauce, right? If you don't have some killer founding team, you haven't had exits before, you don't have any traction, you don't have a product, and you're just saying, I have this great idea, like, do you want to give me some money? It's really hard to own the process, right? Because like, what exactly is the investor having to jump at? Like, they can wait another week. What's the difference, right? Now, if you already have the product and you already have data to show some growth, then lean into what are those metrics that are growing. Like, can you show week over week it's working, month over month it's working? Like, this is going to happen. It's just a matter of how much money and at what valuation. So the more you can get to that story, and obviously by the time you're at like a proper A, a B, a C, I mean, now you're talking like real numbers, real metrics, real diligence of, that's where it becomes quote unquote that much easier, because the numbers start selling themselves. The earlier you are, the more you have to sell the dream, the classic dream and team. So, it's just a matter of how good are you at selling the dream and the team.
Sure. Yeah, good. Excellent. I want to just briefly touch base on some of your other things. Humbition, that's your venture fund. Tell us a little bit about that.
Yeah, so I started angel investing around 8 years ago, have done pretty well, several unicorns. Probably one of my best is I was very early into GOAT, the sneaker marketplace. I love marketplaces, invested into like Turo, Wonder, Carta, and others. What happened is my friend Cyrus Masumi, who created ZocDoc, we're both New Yorkers. And even though I actually built the headquarters of Indiegogo out in San Francisco, I actually always lived in New York. So we would always trade notes and talk about what it's like to get help from VCs or operators. So between Cyrus and myself, we raised over $250 million of venture capital, but some of our favorite people were the operators that invested. So Jeff Bezos, Mark Benioff, Nicholas Zenstrom, the Partovi brothers, Keith Raboy, Ben Ling, Richard Branson, Megan Smith, Maynard Webb, and none of those were New Yorkers. And we just thought, hey, why don't we build out a little bit more of that New York network of founder-friendly VC that's early. So we started a fund, $30 million fund, 2018 we started, and now we have 17 portfolio companies. We invest into seed and A, basically $250,000 checks into seed, $1 million checks into A. It can vary. We don't need to be on the board, and we try to win the award of favorite investor for any entrepreneur because we are operators, as we discussed earlier in this discussion, and try to be as helpful as possible.
So to summarize, all the LPs are basically operators, hopefully providing value add. That list you just rattled off, those are LPs in the fund, or they're
some of them are LPs in the fund, but those are all investors into our previous two companies, Indiegogo and ZocDoc. So what I was saying is those type of people were incredible, helpful. So we just wanted we wanted to be like them, but have a New York location and kind of be like the next generation, if that makes sense.
Cool. So seed and Series A, and then marketplaces, or is there a vertical focus or what?
Love marketplaces, love health tech, love frontier tech. Those are the three things I would say we love. Frontier tech being cutting edge technology companies run by technologists. And then we're generalists. So yeah, we've done like a D2C, we've done straightforward enterprise B2B. But yeah, we love those three, and we love New York, but we're open to anywhere in America.
Very cool. All right.
And just to be clear, we typically are not doing first check-in, like first money in. For us, our seed is like what we call serious seed, which is we like to see about $250,000 of run rate revenue. So basically $20,000 of revenue a month before we typically get involved, unless you've had a serious exit before. That's typically our threshold.
20K MRR, what kind of growth rate are you sort of hoping to see as well with that? Or
I mean, I would love to the higher the better. But the short answer is the first thing is we want to see some revenue. It doesn't have to be substantial, like I mentioned, but we typically are not doing super early where we don't know the people.
Yeah, cool. All right. You can skip this question if you want, because it's like an open one, but you spent a decade in Indiegogo, founder there. What's sort of like the biggest takeaway or lesson learned, from that experience? I know this is a huge question, but is there anything that just really jumps out at you? Like, this is the,
we could probably write a book. We could probably write a book on that one, but, who your co-founders matter, cause you're getting married for a very long time there. And that's really important. Culture is critical. So everybody impacts culture. So it's not one person gets to run it. CEO doesn't get to decide, every decision you make, every hire you make is going to impact that. Don't waste your money on marketing and PR and performance and all this stuff until you have a product figured out. So really dial in on product. And I think too often people say, I didn't have enough money on marketing. I didn't have enough money on sales. I didn't have a good enough brand, or whatever people like to say as excuses. I mean, first, just know that you have a product that people want, and then figure out how to get more people to buy it. Be really smart about getting your investors. I think operators are the best investors. I'm only more and more leaning into that direction, having all my experience. And yeah, those are some examples. Happy to answer any questions.
Yeah, no, it's great. Is Danae still there? Or is she off doing something else? What is she up to?
So Danae is still involved at the board level, and she's awesome. But day to day, not involved with Indiegogo.
Got it. And forgive me, I should probably know this, but did Indiegogo exit? I can't remember, or is it still just operating? Or
still private, no formal exit. Like officially, we're profitable. We're geriatric in internet time. But things are going quite well, and COVID overall was an accelerant.
Interesting. All right. My last question, I'll let you go because you've got a lot of things you're working on. Question I always ask: what advice would you give your younger self about fundraising if you were rewinding the clock as far back as you want to go? Or what is your sort of, favorite advice to give to founders who are coming to you, trying to understand how investors work? Anything we haven't covered?
Yeah, we already covered a bunch of good stuff in terms of prioritizing the list, figuring out your financials, figuring out your story, thinking about how you want to do it. A couple of things I would say is, one, too often the deck or the pitch is just way too confusing. And how I like to simplify it down is I like the entrepreneurs to just send me 12 or 10 bullets, where each bullet can only be like a sentence or two max.
Yep.
And in those 12 bullets, you need to be able to tell the whole story. If that's all you're allowed to tell the investor is just those 12 sentences, can you convey the entire story? Because too often the logistics and overhead of making the slides, the actual chart, the actual picture, the actual colors or whatever, it all gets confused or convoluted. And if we could just have that focus on what are those 12 sentences, and obviously in those 12 sentences, you're going to want to get people excited about the marketing, your traction and your CAC and your LTV and the opportunity and your growth. So you got to be really concise and really tight with those 12 sentences. So that's one thing.
I love it.
And then the other thing you first asked, what would I tell my younger self? That's easy. I actually lived it, which is, like I mentioned earlier, I got rejected by 93 VCs in a row before Lewis gave me some money. Mm-hmm. So what changed? One of the key things that changed was, yes, I had some more momentum with the product, which was great. So the product was able to substitute for my inability to raise money personally. But a big difference is I was very direct and very clear. So in the earlier days, I always tried to keep the door open. So I would keep talking. I would keep explaining. Somebody might subtly say something like maybe they're out, but I would try to talk them back into it. Or they would ask me a very direct question, and instead of answering it because I might be a little embarrassed or upset about my number, I would try to hedge and talk around it. I wouldn't own up to the fact that maybe my growth rate was only 25%, and they wanted to see 100%. Well, what I learned, which changed everything, is just be direct, just navigate the conversation, and then make sure you ask them, do they want to invest or not? Are you in? Yeah. And if they say no, they're not in. That's fine. Move on, and life is good. But in the earlier days, I would never even ask them if they were in. I would just leave these ambiguous, open-ended conversations because I felt if they didn't say no yet, I still have a chance.
Sure.
Which is totally not true.
Yeah.
That's and good. That was one of those things that I had to change as a fundraiser. Now I'm much better at that. But if I got to coach, earlier entrepreneurs, that's a really important element, is don't be afraid of the truth, which is, if you don't have a technical co-founder yet, say you don't have a technical co-founder. If, you haven't figured out exactly what channel that's going to grow your product yet, you tested Facebook and, the CAC there just isn't good enough. You tested Facebook. This is the number. That's the facts. Just move forward. And I think a lot of people appreciate the facts and you being self-aware and being honest.
I love it. Great. Awesome. Anything else? Or should we wrap? Okay, cool. Excellent. If people want to learn more, it's withvincent.com, correct?
Exactly. And if anybody wants to email me, I'm just slava@withvincent.com or slava@ambition if they want to email me any investment opportunities.
Excellent. Cool. Well, it's fun to catch up. Wow. What a wild ride you've had. It's exciting to pick your brain about some of this stuff. So appreciate it. Thank you. Good to see you. You look good, and enjoy the rest of your summer.
Thank you.
Over and out.